When the money supply is going to contract, that's certainly not going to be bullish for Bitcoin. And when the money supply is going to expand, that's going to be generally more bullish for Bitcoin than any other asset. So I'm sure people listening at this point, some people have thought, well, Stephen, when they print money, everything goes up, right? And that's, so you're just saying that, Bitcoin is anything else, right? It's just, everything goes up when the Fed prints money. And I understand that, pushback. But to address that, so Bitcoin, by virtue of not being real, it's not a real thing. Bitcoin isn't, tangible. It's an abstract money, and it's digital too, to boot. Even if it was gold, I would still say it's technically abstract. It's what its real financial identity is. But when they are manipulating the abstract layer, so the financial layer, and they're engineering that, if you can hold an abstract monetary instrument that isn't real, it doesn't have cash flows, it doesn't have debt, it doesn't need maintenance, it doesn't have, property taxes, you don't have to rent it out, you don't have to do all these things you have to do with other assets. Money is essentially a virtuous bubble. So money is this, it's this bubble that, doesn't need to come down. It is, it can command really whatever price it needs to if it's just money. And so in a world where they're printing money, Bitcoin is this pristine, pure inflation hedge where, yes, stocks will go up. Yes, housing will go up. You could buy those things and you will get more dollars as those prices increase. But, if you buy a stock, that stock has competition. They could make a bad product decision. They could get, disrupted. And, same thing with houses in different ways. People can move to different areas. There could be a hurricane, all these sorts of things. Bitcoin has none of those risks. And we live in a world where all of these financial assets are essentially, they're just trying to catch the wind of inflation. They're not going up. I would say that, a single digit percentage of broad asset growth is because of real productivity, real economic increases. And the rest of it is just inflation. Single digit, maybe, 10%, 15%. It's a low amount. The majority of it is actually just inflation. And so these assets have been turned into these liquidity proxies. Investors buy them, and most of the gains they're getting are just inflation. They're not really betting on, one of these companies making twice as many products or having an engineering breakthrough, maybe, in some cases, but broadly, no. And so Bitcoin, it's not this imperfect liquidity proxy. It's not this thing you're trying to turn into a store of value. That's just what it is. It's just money. It's just this beautiful instrument that is designed to protect your financial value. So when they are messing with that layer, I see Bitcoin, I think it's going to move directionally with monetary expansion. So are other assets. But Bitcoin is a much cleaner way. It's generally, for the foreseeable future, I predict that it's going to go up more than those other assets. And it obviously also has other benefits, like you can store it yourself, you can transact with it. There's, all the other stuff.
Well, yeah, because it's inelastic, and if more people start to consider it as a hedge against inflation, then we will naturally see. Well, it could even become even more volatile again.
Yeah. I think there are scenarios you could see volatility. I think everybody expects the volatility is going to go down, but depending on, some people expect we're really entering into turbulent, financial times, and I think there's reason. It's whether or not that happens, it's reasonable to believe that. And yeah, you could see increasing volatility. You can look at gold in the Weimar Germany, right? I don't know if you've seen that chart, but it's, it's this up and down. And, that's during a time of, where gold was basically the best thing to own. That was the best way. And yet the volatility increased. So I think that's definitely reasonable.
So how would you explain then the run up we had with Bitcoin in the last couple of years was kind of followed the typical every 4-year cycle? But you wouldn't explain the previous cycles as being people hedging against inflation. Would you say, how do you square that circle? Because it's almost like Bitcoin has matured over this last 4 years and has become correlated to the rest of the economy. Is it coincidence?
So in the previous cycles, I mean, there was still tremendous monetary expansion going on. I mean, since 2008, which is literally from the moment Bitcoin was born, we have been in an era of unprecedented monetary expansion. And so there were fits and starts, and I might be wrong on this, but I even believe the top in 2017 coincided with the Fed contracting, hiking rates and contracting the monetary supply. So actually that top, I believe, actually coincided with that point. But even if it didn't, even if I'm wrong on that timing, we have been in an era of unprecedented monetary expansion where the entire story, Bitcoin's ups and downs, has coincided with that. Now, earlier on, there were much more significant existential risks to Bitcoin, right? There was questions of if it would even survive, if after Mt. Gox, who even knows what this thing is going to look like, and are there, the fork wars, and is Bitcoin ever even going to get adopted? So in those earlier times when Bitcoin is much younger, I think you can obviously say that a lot of the investment, both people buying it and people getting worried and selling it, had a lot more to do with just, is this thing going to survive? Is it going to get any measure of adoption? We think it's the future. We think it's a scam. And that had a much larger role in the beginning. And then as it's matured, like something I see today in this cycle compared to 2018. In 2018, after the run, I felt that people were legitimately concerned about the future of Bitcoin. Like, oh my God, we got swept away in this whole wave. What if this is just nothing? What if this is hot air? At least, for people new to it. And, I'm not embarrassed to admit I had those concerns.
I've had them. Danny's had them. We've all had them.
Yeah, we've all had them, right? And that was a real concern in 2018. It was like you're hungover after the party and you're like, oh man, like, was I wrong? Is this just have so much more risk? Is it so much just less likely to do what I thought it was going to do? But in this cycle, I don't know many people that have that same concern or that same degree of concern. I think there are risks about, oh, well, how low do we think it's going to go and what's going to happen? And, maybe some regulatory questions. But this sort of existential question of like, is Bitcoin even real? Does it even have any substance? Most people, I think, aren't thinking that. And that's just one of the differences is as it's matured, its performance, its value, its success, I think has been more tied to what's happening in the world and how we're going to navigate the current environment rather than just this, is Bitcoin legit?
And do you think Bitcoin will remain intrinsically linked to decisions of the Fed, or do you think eventually it just decouples?
As long as fiat currencies, the central bank paradigm is the dominant monetary paradigm, Bitcoin is a contrarian hedge against that. That continues until a world where Bitcoin is in some way the primary monetary paradigm. In a world where Bitcoin is just money, then it has a very different dynamic. And I'm not speculating on, I think there's multiple outcomes, right? I don't think that it's just like inevitable that Bitcoin becomes like the dominant paradigm of money. I think there are scenarios, and I might catch some heat for this, but I think there are scenarios where, in the same way that gold has existed alongside fiat currencies, I do think for the foreseeable future, Bitcoin just exists alongside fiat currencies. And I think there are scenarios where it could become the dominant paradigm. And I think there are other scenarios where it is still successful, it's still widely used, it's still adopted, but there is also another monetary system going on. I think both of those are options. But it is, I think as long as Bitcoin is a contrarian minority monetary system in relationship to a dominant one, it's going to have this dynamic.
And so now you know this and you've gone down this rabbit hole. How's this changed any of the ways you maybe consider about buying Bitcoin, holding Bitcoin, or anything to do with your conviction?
Yeah, so to me, this really doesn't it doesn't weaken my conviction. This in no way I think weakens the argument for Bitcoin. I actually think let's think about this from scratch. What do we want Bitcoin to be? Do we want Bitcoin to be this asset that only does well when the world gets utterly messed up and everything is screwed and we don't have enough stuff? Is that the only scenario we want Bitcoin to do well on? Like real supply, like consumer price and supply chain problems are bad for people. They're bad for the world. They're literally human race becoming less abundant and poorer. Is that what we're betting on? Is that, or are we just so worried that humans are not going to be able to operate society that we need to own this asset? Or do we want an asset that protects us against irresponsible central bank decisions, right? They're kind of these two different paradigms. One of them, you're bearish on humanity. You think humans aren't going to do well. We're not going to produce stuff. We're not going to be efficient. The other one, you're bearish on central bankers and governments. And I know which one I'm betting on. I'm betting on humans, right? What I'm concerned about is the governments, the money spending, the debt, the central bankers. This is the system we've implemented. I want the asset that protects me against that. I don't care if things go down, if Saudi Arabian oil production goes offline.
Yeah.
We will figure it out. And if we don't, we have much bigger problems.
So I'm going to be keeping a much closer eye on what the Fed is doing. We had Preston Pish on the show recently. He thinks a massive print is coming.
Mm-hmm. I do too.
Yeah, you do too.
I do too.
So
they're trapped.
Yeah, so they're trapped, and he thinks they're going to print like they've never printed before, like potentially trillions. And if that does happen, then we would expect Bitcoin to go up.
Precisely. That is what I think is Bitcoin will go up dramatically when the direction of monetary expansion changes, which is going to occur unless something very unexpected happens when the Fed pivots. And that pivot could be kind of, it doesn't necessarily have to be rate cuts, because there's an increasing probability that the Fed may actually have to bail out Japan or Europe or both. There is a precedent in 2008. There's something called swap lines. And basically, it's literally QE for other countries. It's saying, at the Fed, we're going to print money and we're going to buy your bonds. We're going to buy the Japanese bonds. We're going to buy the Euro bonds. And I think there's a meaningful probability that one or both of those occur. And in that, the Fed could continue hiking rates in the US while also printing money to stabilize Japan or Europe in the crises they're facing. And so that could be a form of a pivot. There is monetary expansion there. They could start to cut rates. They could even just like slow down the hikes.
Hold on, is this because we hit the euro dollar parity?
Yes.
And that's a huge risk to the US in that continues, because that would make American exports too expensive.
Yes.
So is the idea to buy up European bonds by the US government, print money to do that, to bring the prices back,
So it would have the result of making the dollar, lowering the value of the dollar, which is, we need that, right? We can't sustain where the dollar is today is ultimately not going to be good for us. First, it hurts them. So when the dollar goes up a lot, it hurts foreign countries first.
Yeah.
But then it comes back and hurts America. So America doesn't want it to stay as high as it is. So that would be beneficial. But I don't even think that's the main reason. That's like an added benefit. The real reason is literally to maintain the social fabric, to keep society operating in the face of a profound energy crisis. And that's the case in both Japan and Europe. Europe, it's obviously the natural gas, Putin, Russia dynamic that's making things very expensive over there. Japan they're not a natural energy producer. So they have to buy all their energy. They have to import most of their energy in the form of fossil fuels. And because they've been engaged in yield curve control, the yen has fallen precipitously, meaning it's more expensive for them to import energy. And so they basically just need money to buy oil and to buy energy. And so it's literally a question of social stability. And there's plenty of people to listen to that are pessimists. I'm not a pessimist. I I say these things to talk about the issues and talk about the scenarios. I think humans are very resourceful. So I'm not saying this is like everything's going to fall apart, but Japan needs that support or they're going to be in trouble, right? And so I think that is going to happen, and that'll give them breathing room, and it'll cement their alliance with the U.S. But those are all. My point here, though, is that there's all these different angles in which the Fed could pivot. There's all these different angles at which they can start to expand the money in the system without necessarily, cutting interest rates 100 basis points or restarting QE. And I would expect that's what we're going to see. We're not just going to see Jerome Powell come out in a couple months and say, QE's back, baby. We're going to print so much money, more money than you've ever seen. Like, that's absolutely that's absolutely not going to happen, because he would lose credibility. And that's the other pressure they're under, is they need to. It's very important for them to maintain credibility. And so they're walking a tightrope.